I think your job is to buy the dip. I wouldn't freak out if it has not acted as a safe haven in a war situation, because everything went down. This is not the end of the bull market, unless we're going to World War III and it's a total nightmare in everything, right? My experience, this is now the fourth crypto winter I'm in, is you want to be at the sidelines, you don't want to second guess. This always takes longer, and it usually always ends with a total panic sell-off at the end of a crypto winter. We haven't seen that yet.
Stock markets and risk assets are rebounding today. The S&P 500 is up about 50 basis points. The Nasdaq is up 1%. Bitcoin is up nearly 1.5%, back now to $17,000 a coin. And gold is taking the bid as well, up to $4,500 an ounce. So what's next? Well, what's happening today right now is Iran has supposedly received a 15-point plan from the Americans, from the Trump administration, to end the war. President Trump claims that they are in negotiations right now. Iran earlier this week has refuted any such claims that they're in talks and denied any such events. But the markets seem to believe Trump, and we're getting a bid. So is this the end of the gold slump and the end of the oil rally? We'll find out. Florian Grummes joins us today. He is the managing director of Midas Touch Consulting. Welcome back to the show, Florian. Good to see you.
David, good to see you. Thanks for having me.
Well, it seems like things are slightly de-escalating. Trump has supposedly pushed a ceasefire plan, 15-point plan to end the war, report says. This came in just this morning. So nobody knows what's going to happen next, and nobody knows if this report has actually been received by the Iranians, and they're going to actually take this into account and start negotiations. Iran has supposedly received it, but nobody really knows. So, Florian, how are you reading the current situation right now? Markets seem to believe what's going on. Is this the beginning of the end of the war?
Yeah, hopefully. But let me start with this. It is very, very difficult to really assess what is true, what is wrong, what is fake, what is made up, what is a narrative from one or the other side. People have to be very careful now. You basically have to research and investigate any news from 3, 4, 5 different perspectives to make sure that it's actually accurate and true. So that's really one downside or sad part of this nasty war, which I don't support, by the way, and that it's become very difficult to figure out what to believe and what not to believe. So you mentioned now this news. My information right now is that Iran has denied that Trump is in negotiations with them, and that there are any talks. So maybe he's making it up. I don't know with whom he's been speaking. I mean, we should not forget that they basically killed all the leadership. I think there is probably some form of a power vacuum in Iran, or at least it's unclear who really has the authority to speak for the whole country and who has enough power over the military apparatus as well as over the conservative, hardcore religious part of the country. I mean, this is very complex things, and I mean the news flow is rather small here. I mean, the internet is turned off in Iran for 3.5 weeks already. It's very difficult to get verified news out of Iran. So I don't know with whom they are actually talking. Again, one of the official spokespersons from Iran denied it. We have to see how this is going forward. I think it will be very difficult to come to a agreement and a peace deal here, although Trump is forced to do something because the consequences out of his attack on Iran are devastating. And we've seen it in the markets. We are seeing it now, oil shortages all over the world.
Yes.
And if this continues, we all are screwed.
This is probably a little bit more significant to the energy markets and broad markets overall. Non-hostile vessels, this is according to the Iranian mission to the UN, posted yesterday. Non-hostile vessels, including those belonging to and or associated with other states, may provided that they neither participate in nor support acts of aggression against Iran and fully comply with the declared safety regulations, benefit from safe passage through the Strait of Hormuz in coordination with the competent Iranian authorities. Interesting. Let's see how this actually plays out. But this announcement seems to have eased oil markets somewhat. WTI is now at 89. And of course, we know that this impacts Europe and Asia more than North America. So I'm expecting Asian markets to actually respond positively to this as well if this were actually carried out. What's your interpretation on how this may impact energy markets? If the Strait of Hormuz reopens to certain vessels, will that be enough to reverse market action that we've seen in the last couple of weeks?
I mean, we have seen somehow a relief in the last 2 days here. Actually, you could make the case that there is some relief developing already since that crazy spike to 120 2 weeks ago. But make no mistake here. I mean, there's been done a lot of damage to many oil and gas facilities in the whole Middle East. It's not only Iran, it's Bahrain, it's Qatar, it's Kuwait, it's the Saudis, and also, of course, the United Emirates. And this will take time. So I read today or yesterday that just rebuilding the facilities in Qatar, which is a main player in the LNG gas market, will take 3 to 5 years. So we are probably seeing some form of relief right now in the oil market, but I think down the road, the real consequences in terms of physical supply and demand will just show up more and more over time. And I think oil market is extremely well supported here, and we will probably see new highs in the oil market down the road at some point. That's my expectation. Maybe not in the immediate term, unless Mr. Trump tweets something again, and then markets go the other way, the other direction. But in the longer run, over the course of this year, I think oil is going.
You have a chart that I'd like you to show us, please. It shows us the long-term cycle of oil versus the S&P 500. I wonder if oil was on the verge of a breakout anyway, even if this war never happened. Can you just comment on the outlook here?
That's my thesis. So maybe to start with, and going back to your initial post here, I mean, I found this cartoon here really funny. I'm not sure with whom Mr. Trump has been speaking over the last 2 days. I mean, he killed the leader. Don't forget, this is the most important religious leader for the Shia people, and basically he sacrificed himself. I'm not a follower of that religion, for sure not, but you need to understand that all those 90 million people in Iran are basically more united than before the war. And it's unclear. There is a power vacuum. And so I found this very, very significant, this cartoon here. But coming back to that chart, this is the commodity basket, the S&P GSCI total return index against the S&P 500, which is one of the most important, or the most important stock market index, reflecting or representing the 500 most important companies in America. And you can see that this chart goes back to 1971. And you can see that stocks against commodities are moving in long-term cycles, usually lasting at least a few years, usually at least a decade, sometimes even 2 decades. So that's not a short-term 1 week, one month kind of thing. And the last significant change in that ratio here was the great financial crisis in 2008. And since then, basically, stocks have outperformed commodities overall. And this commodity basket is heavily energy and oil weighted. And I'm very much sure that this Iran war now is the trigger to basically skip or kick this ratio now in the other direction. And going forward, I think commodities will outperform stocks over the next probably 5 years at least. So
what is the relationship between that chart? So when commodities have historically outperformed stocks, what is the relationship between that and inflation?
Yeah, of course. I mean, rising commodity prices is always inflationary. So, for example, if you go back, this is probably the most similar kind of event here in the early 70s. The oil crisis back then, you can see this sharp rise here of commodities against the stocks, and that was very inflationary. So one of the takeaways in my big picture macro analysis is that we're going to see the next leg up in inflation, which will hurt us all at the grocery cashier, basically. That means cost for the normal life is going up, whether you like it or not. That means your insurance bill will go up. Of course, gas at the gas station is already up. And we know that oil is in so many other products and is part of so many products, and logistics are so important, and they all need oil to bring and move stuff around. So I think that's pretty much a logical assumption that inflation will be moving higher. And at the same time, just look at the pictures coming out of India, out of Bangladesh, out of Thailand, out of all these Asian countries now. People cannot move with their cars anymore because they're out of gasoline. So going forward, I think the risk is here really that also the Western world is moving into a recession or even a depression, if we are not already there. Because, as you know, the last few years we've seen quite a bit of an artificial growth. I've been always coming back to that cracker boom theory, where we said that this boom or apparent boom is mainly driven by money printing and not by real economic activity. And as you know, for example, the AI companies have been trading in a circle for months and showing huge growth, but in the end of the day, they were just basically lending each other money and then spending it. And it's been quite a questionable kind of thing. And so going forward, I think if you bring these two together, it means stagflation, which is not a nice scenario for the normal human being, but still, of course, as an investor, you can make money in these markets.
Before we continue, I want to bring to your attention today's sponsor, Monetary Metals. Now, most people think of gold as something you buy and store. Monetary Metals takes a different approach. Instead of just holding gold and waiting for price appreciation, you can earn a yield on it paid in physical ounces. Through their leasing platform, investors can earn up to 4% annually with yield paid monthly in ounces. That means your return is measured in gold, not just in currency terms. Rather than sitting idle while you pay storage costs, your gold generates income. The metal remains your asset and can be redeemed at any time. Thousands of investors are already earning monthly interest in gold through Monetary Metals. Visit monetary-metals.com/Lin, link in the description down below, or scan the QR code here to learn more. The stock markets don't seem to like higher oil, and maybe they're both just responding to ease of tension or more tension. But either way, let's talk about gold and Bitcoin. Starting with gold first. My first observation, and allow me to share my screen for just a minute before we go back to yours, Florian. My first observation is gold has not been performing like a safe haven asset for the last couple of years, and this is more evident now than ever. Gold is rising and falling alongside stocks, and every time we have an escalation in the conflict, gold goes down. And today, for example, when there seems to have been news around de-escalation, such as Iran possibly letting certain vessels through the Strait of Hormuz, a partial reopening, should we say, or a 15-point peace plan proposed to Iran by the Trump administration. Well, that news has boosted markets, stock markets, and gold at the same time. If gold were a safe haven asset, in theory, it should be doing the exact opposite, but it is not. But that's just my observation. I'll let you comment on what gold is responding to currently, and then we can take it from there and talk about what's next.
Yeah. All right. So I think it's very important to differentiate here. We have to understand in which condition gold went into that war situation that suddenly showed up 3.5, 4 weeks ago, right? So this is a chart going back to the autumn of 2022, when all markets came back down. That was a difficult year for all markets. Everything went down together, if you remember well. Bitcoin had massive problems in that year. Yes. It was a turnaround in interest rates. Stock market came down, and gold actually held up better than everything else, but also came down. And it made this triple low down here at 1615. Then it went a while sideways. This is the invasion, the Hamas invasion into Israel in October 2023. And then half a year later, the breakout happened in gold in February 2024. And since then, gold went up massively. And my claim or my theory is that basically gold started to price in all this disaster in the Middle East since October 2023, because we have seen this rally, which basically took gold up 250% in less than 2 years. And this is the condition that basically gold came into that war situation. So it's been very overbought. As you can see up here, we had a big reversal here. That was end of January, early February. Gold went down $1,200 in just 2 days. That's been seen and unheard of. Then it came back up, and then on the day of the start of the war, we made this one lower high and then this massive sell-off. We have seen multiple times in the past that in situations where the whole market suddenly freaks out and is in panic mode and liquidity disappears, everything goes down. So I think this is something you have to understand. And gold came into that war being very overbought and already probably in a correction that had just started. So that's why it probably was so severe, that pullback. But if we zoom out, I mean, you can see this in this chart here. We are still in a clear uptrend. In your job in a bull market is to buy the dip. So I bought on Monday morning with both hands physical metals. And if gold should continue to move further down, which is still possible here, I will buy more. So safe haven, yes or no? I mean, I can tell you, and that was my biggest learning experience as an investor and trader and speculator in 2008. I thought being fully invested in precious metals, mining stocks, and everything metals related, I would be well positioned for a stock market crash. And then I had to learn the hard and painful lesson that when liquidity disappears, everything goes down. And on the day that Bear Stearns went bankrupt in March 2008, gold topped out at 1,038. It had priced in this whole problem in the financial market and the real estate markets for quite a while. Once the news came out, it topped out, and then it went down 33% in the following 6 months. And I thought I would be well protected against the stock market crash, while it was actually the opposite. Gold got annihilated, and the mining stocks as well. But also gold bottomed out first. When the Fed back then announced the massive money printing programs, gold bottomed out first and was already back at $1,000 the following February when the stock markets finally found their bottom. So this is kind of a blueprint maybe that we can also use this time. So going forward, I think, I mean, who's going to pay for that war? Where's the money coming from? America is already broke. They will have to print much more money going forward, and that will benefit gold. We are currently in a correction, a healthy correction. It's a pullback, finally a pullback in a strong bull market. I think your job is to buy the dip. I wouldn't freak out if it has not acted as a safe haven in a war situation, because everything went down. So I think that was to be expected. I was very careful, actually. I published a lot of very cautious risk-off statements the last 4 weeks already. We've been risk-off already since late January, early February. We took profits in all our mining stocks, everything. That's been my recommendations to all my followers for the last nearly 2 months already. So I didn't foresee that war, but this run up here in gold, right? The metals were ahead of themselves, and we are now seeing this healthy correction, triggered, of course, now by this war event where suddenly liquidity disappeared. And we can, of course, talk a lot about who might have had to sell their gold in the last few days and weeks. Just one little example that people might not think about. Just 3 days after the first rocket hit Dubai, and I was in Dubai, we managed to get out 2 weeks after the first drone got shot down. But immediately 3 days later, the first news came out that people, because Dubai is one of the gold hubs, 20 to 30% of the global gold trade, the physical gold trade, goes through Dubai. Much of the gold is coming, of course, through Africa, but also from other countries and Switzerland as well, because Dubai has a lot of refineries, and from there the gold goes often then towards India and China. And all these gold trades are often handled by intermediaries who basically make a little commission, and they work with security and credit instruments given by banks. But within their little trading plan, so to speak. They don't have like storage for 2-3 weeks in Dubai. So once the airport got closed and there was no more planes moving, these people suddenly were stuck with big gold positions that they needed to store and insure in Dubai. And that freaked them out. They needed to get rid of it because they couldn't pay for that. So you've seen people selling their gold $50 below spot immediately 3 days after the first drone got shot down. And that was something I mean, nobody would have thought of this before because, I mean, Dubai is one of the largest, best managed airports in the world. And nobody would have thought that this airport is going to be shut down for a while. So these are things that are suddenly happening. And this is just one little explanation that I can offer for people to understand that there's many factors playing in this big international gold market. Of course, other countries might be forced at some point to sell their gold for oil if they run out of dollars. China, probably one of the reasons why they have accumulated so much gold over the years, is that they were well aware that there will be a point in the future where they can buy gold, oil that they need only again with gold. So that's also part of the story here. And the gold market is always very much forward looking. And I think there's lots of things coming together. And in a liquidity crisis, many fund managers, many hedge fund managers, many fast traders have to sell their gold positions, which is then most of the case, derivative positions or ETF positions. And that's why you've seen this crazy sell-off in gold.
Well, what is the sentiment and positioning in gold right now telling you? The fact that we've already sold off, gold has already sold off from its top by the order of 20%. One of two ways to interpret it. Beginning of the end of the bull market, because this is exactly the pattern that we saw in 2011 and to some extent 1980, when gold double topped, fell, and then continued falling. Or if the conditions are right for another, leg up higher for gold, then this may present an opportunity. How do you see it?
Yeah, so I think this is not the end of the bull market unless we're going to World War III and it's a total nightmare in everything, right? But if there is some normality coming back and markets continue to function, international trade more or less continues, you will see massive money printing. You will see all the central banks continue to buy. You will see Tether continue to buy. And this is all over the longer run driving gold much higher. I think this war now actually has even put more drivers into that bull market. But in the short to midterm, I would be a little bit cautious. So we're looking here at a sentiment chart for gold, meaning how is the feeling, the mood of the investors, right? And you can see that over the last basically 1.5, 2 years, most of the time it has been very optimistic. We had this extreme greed and fear kind of situations. Then you had a cold shower, and then again the market rallied, continued higher. Typical bull market behavior. Now we broke below those last lows here, so the gold market has not been as depressed as it is right now for the last 1.5, 2 years. And the question now is usually the pendulum when it comes to the mood of the investors is always from one extreme to the other, meaning from extreme greed and euphoria to extreme panic and fear, right? And the last time we had fear was down here in October 2022. That's the chart I showed you before where we had this triple low. So you can make a case that maybe gold needs to come down here and really calm down, cool off that overheated sentiment, get rid of all the weak hands in that market, and then we'll be ready for the next leg up. That would also support that this war will continue and will take more time. So that is one thought that I have currently. That could be a possibility, because this pattern obviously has been now destroyed, or gold has been basically leaving that kind of typical sentiment behavior of the last 1.5 years. So something else is happening right now. And if the pendulum really wants to swing now to the other extreme, meaning fear and panic, there is still some way to go. And going back to the gold chart here, that was the triple low down here. So I wouldn't be surprised if gold actually would want to come back down here, maybe below $4,000 at some point, maybe testing this whole support, the top from last year, April 3,500, That would probably be my worst case if it comes down here. But this will take some time. This is not happening within 1 or 2 days. You have here on the weekly chart, which is a little bit of more of a big picture kind of approach, 2 times confirmed stochastic signal here. So I'm waiting for an oversold weekly chart. That would be a good setup to really go back in that bull market. If you zoom in further, and we're looking at a daily chart here, you can see that this was the top here in January, and then we had this first flush, $1,200 in 2 days. Gold came back up nicely, and then here that was basically the start of the war, and it heavily sold off, and it tested that 200-day moving average on Monday morning, slightly missed it by maybe $20 or something, but for me that is not enough. Typically what you now get is a trading in between those two moving averages. The blue one is the 50-day, the red one is the 200-day moving average, something here in between, and probably at least another test of the 200-day moving average. But good news in the short term, we have a fresh buy signal. I think gold now is on the way back to probably the 50-day moving average, maybe slightly above 5,000. And then we have to see how this war plays out. I'm a little bit cautious. I don't think it's the time to be fully aggressively invested in that sector again. And by that, I mean loading up completely on the mining stocks. But there has been some of those names that I really like. They have been decimated over the last 2-3 weeks. Some of those stocks came down 50-60%. So nibbling here and there is already a good idea, but I wouldn't be too aggressive. Just still make sure you have enough liquidity on the sidelines, because this can also move into a 2008 kind of scenario here where the whole market goes down. I think you have probably had someone on your show recently talking about the whole private debt, private equity situation in America, which is a totally different story and also looming and could create a lot of stress in the markets. So I can just recommend, even though we have high inflation and loss of purchasing power, keep some liquidity on the sidelines for the next few weeks and months, not with the goal to stay in cash for the next 5 years, but for at least a few months. This will always give you the option to move back in if there's new opportunities.
Okay, I'd like to spend the last couple of minutes talking about Bitcoin now. Bitcoin has totally not moved in lockstep with the NASDAQ, which was a narrative in 2021, 2022. As you can see, ever since basically October, they are not related at all. But I will notice that I will observe and show you that Bitcoin has moved closer in lockstep with the dollar. This is interesting. Maybe you can help us explain why perhaps the DXY on the whole has seemed to moved more broadly with Bitcoin than Bitcoin moving with the NASDAQ, for example. My theory is that as Bitcoin has been held by more treasury companies and seen as an actual reserve asset now, when people need to liquidate US dollars, they liquidate dollar-denominated assets such as Bitcoin if they were to buy Bitcoin denominated in dollars in the first place. And then vice versa, buying Bitcoins with dollars if the demand for dollars goes up. Basically, Bitcoin is now being seen as a dollar proxy. That's what the chart looks like to me, but I'll get you to explain what Bitcoin is responding to.
Yeah. Well, I mean, when we met the first time, I think 6 years ago or something, I was very bullish and very enthusiastic about Bitcoin still. But
that's right.
As you also know, that has changed a little bit over the last few years. In my assessment, and again, similar to with gold, we have to differentiate. And Bitcoin came into that war situation completely oversold, quite the opposite of what gold actually had been doing before the war started. So Bitcoin topped out here in October last year. We had divergences all over the place. And it basically came down from 126,000 to slightly below 60,000. It underperformed any other asset class over the last few months. It was a total disappointment for many. To me, it was clear that we are in a crypto winter since last October. My experience, and this is now the 4th crypto winter I'm in, is you want to be at the sidelines. You don't want to second guess. This always takes longer, and it usually always ends with a total panic sell-off at the end of a crypto winter. We haven't seen that yet. But I will also say that it's true. Bitcoin here has not sold off like the stock market and not sold off like gold over the last few weeks. Instead, it's basically moving sideways, and it's basically the same what it did here in November, December. So we had the first leg down, sideways, next leg down, another sideways. My assumption is at some point we will have another leg down, but I might be wrong. I'm cooking with water. I have no crystal ball here. This little pop up here that we have seen over the last 2 weeks in Bitcoin, this one here, apparently, again, going back to Dubai, lots of expats, lots of families, lots of crypto bros have left the city. And as people might know or not know, Dubai is a very cash-heavy city still. So if you, for example, would rent an apartment with a short-term rental company for 3-4 months, you can pay the bill in cash banknotes if you want. Totally normal. They will send you an Indian guy and he picks up your 10, 20, 30, $50,000 in cash. Totally normal. Nobody will ask questions. And that means there is a lot of cash still circulating in that city. I don't want to say anything good or bad about it. It's just what it is. If you're an expat and you're sitting with $50,000 or $100,000 in cash in Dubai for whatever reason, and you need to leave because you don't trust this whole geopolitical situation anymore, you're not taking that in a bag and travel with that to London. So you need to get rid of that. And we have immediately, again, just a few days after the first drone, we've seen USDC demand going through the roof in Dubai. And then as all these intermediaries didn't have enough USDC, people also started buying Bitcoin as a way to move their money out of the city. And that is one of the advantages. Clearly, people have been talking about this for years. This is one of the advantages that Bitcoin and crypto have against gold, right? I mean, you can, on a stick, on a ledger, or just with the phrase in your head, you can move money very quickly. Of course, this is, I assume, once or twice in a lifetime scenario. So it's not like Michael Saylor wants to tell you every week you have to move 5 million from one end of the planet to the other. That's either a luxury problem or a problem for a big company, but not for a normal average guy. But that was one of the driver, and that I think was responsible for this little blip up here. We have seen something similar in the Ukraine war at the beginning, but I don't want to talk too badly here about Bitcoin because the chart doesn't look bad. I mean, you can see this has been very oversold here, and this is the weekly chart. There would be a lot of room actually to the upside. Going back to the last crypto winter, that's what we have seen in 2022 into 2023 when then finally things changed. So it could be that Bitcoin just moves sideways here for quite a while. Could it rally up to 80,000, maybe even to 90,000? Yeah, why not? Possible. If we look here on the daily chart, you can see that this is still trading quite a way below the 200-day moving average up here, the red one. So even rallying back up to 90,000 would not change the bigger picture for Bitcoin. But there is some chance for a rally here in Bitcoin.
The Bitcoin outlook here. Are you more bullish on Bitcoin right now or gold?
I think I'm more bullish on gold in the short term. I still want to see this. I'm not believing that we have seen the end of the crypto winter. I know that this can still get very hairy, I would say, very, really challenging. If there is more stress in the American stock market at some point due to all this private equity, private debt situation in the funds, which, by the way, is exactly the same thing that we have seen in the months and maybe 1 year before the breakout of the financial crisis in 2000.
That's right.
So people need to take this serious, and we need to look very, very sharp on this corner, which is often neglected. If that is the case and stock market really gets into trouble, I think Bitcoin will not be able to do its own thing, and it will come hard down with the stock market together. While in gold, I believe any pullback towards 3,500 or below 4,000 will be bought by many central banks. There's a lot of physical demand still. So gold is in the bull market. You have to buy a dip. Bitcoin is still unclear right now. The bigger picture is still we are in a crypto winter. Once this turns around, that's a different thing. But I have no indication yet that this crypto winter is over. That's why I'm more bullish on gold going forward.
All right. Excellent. Florian, I appreciate your insights. Thank you for your much needed update on the markets. Where can we find you for more updates?
Well, people can go to my website, midastouch-consulting.com. They can subscribe to my free Substack. I send out daily charts on gold and silver. We also have a Telegram channel with lots of people from all over the world sharing informations, charts, all related to precious metals, commodities, mining stocks, and also crypto. Midas Touch Consulting on Telegram.
We'll put the links down below, so make sure to follow Midas Touch Consulting there. Thank you so much, Florian. Good to see you again, and we'll see you again soon.
You're welcome. Thanks for having me. All the best for you and the viewers.
Thank you for watching. Don't forget to like, subscribe.